Hello, fellow investor. In this video, I'm going to review 14 charts from my portfolio holdings that I found interesting at the close on December the 19th of 2025. I'm going to run through these charts and share with you what I'm seeing on them and how they've helped form any decisions that I made on these particular holdings for my portfolio. The next 2 weeks of trading include holiday shortened trading sessions expected to have lighter than typical volume. I am also going to tackle a viewer question left after Friday's live stream. If you enjoy these videos, please like the video. Please subscribe to this channel and set the notifications for future videos. Be sure to press the like button to help support this channel. Let's get started. We'll start off with BlackRock Science and Technology Trust, that is symbol BST. This has a portfolio rank of 4 in my portfolio. It is currently trading below its net asset value of $42.80 per share. This changes on a daily basis, and I usually update my charts twice a week or so to keep track of the NAV so I know whether it's trading at a premium or a discount. I also have a resistance line here that shows me where the primary resistance is. That's currently at the high that was set at the beginning of November, and that's currently about $44.22. I have a blue dotted trend line which is set to the bottom reversal at the end of March, and it has been tested several times to the downside. It finally broke below that trend line during the tech sell-off during November. We did have a recovery and then another sell-off predominantly this week. In the last 2 days, we're showing positive strength in pricing. It is currently trading above a downward sloping 50 line. The 21-day moving average was turning down but bottomed out and is now rising. You can see where I've made some purchases, and I also sold a fairly large chunk here. During this tech downturn, when it started breaking down, I just didn't know how far it was going to fall. It looked like maybe the 200-day could come back into play. It actually tested a support line that was just slightly above that, so this wasn't the best trade, but I honestly did not know how far it was going to pull back. It could have at least pulled back another couple of dollars, but a day later it actually recovered and started an increase in its price action. I do see that the RSI is found support at around 40, is moving higher, is crossed above the 50 line. We did have both a bearish crossover in bearish territory and a bullish crossover in bearish territory this week. So it is moving a little bit higher. I expect this to actually move back into bullish territory fairly soon. We do have accumulation starting to pick up, and the money flow is now back into positive territory after being after having outflows basically since the first week of October. It is outperforming the S&P 500 by 4.12% over the last year, and it is underperforming the technology sector by 1.95%. This one pays its distributions on a monthly cycle. It goes ex-dividend on Monday, December the 22nd. But this particular year, they are actually paying a special dividend of $1.20 per share. So that was a nice little bonus this month on BST. I did do a detailed video on this particular holding on December the 20th of 2025. So be sure to watch that if you're interested in closed-end funds as a source of income. Take a look at Citigroup, symbol C, in a daily one-year price chart. This is a relatively small holding in my portfolio, currently ranks number 43. We can see that Citigroup did hit a 52-week high on Friday. It closed at a 52-week high. It had previously had resistance just slightly lower than that, so if it can hold this, I'll change this to a support line. It did cross over this resistance line, which I did turn to a support line, and that was at the high we saw on around September the 22nd. So it did break out above that. Citigroup has a book value of $108.41, so this cyan colored line is set there. It is trading above an upward sloping 50-day, an upward sloping 21-day, an upward sloping 200-day. My average cost is around $92 per share. Citigroup continues to have the lowest price to book ratio of the 5 U.S. diversified banks. Currently, its price to book is about 1.06. The RSI is in overbought condition at the moment, trading above 70, sitting at 76.27. We had a bullish crossover in the third week of November, and that was in positive territory, and it has continued to have positive momentum. The distribution still looks good, but has leveled off since about the third week in September. It has spent most of the past year with inflows, so positive money flow. It has outperformed the S&P 500 by 48% this year. It's outperformed the financial sector by 48% this year. It's outperforming its industry group by 32.42% this year. And that industry group is outperforming the S&P 500 by 11.85%. So it is trading above its book value, and there are 15 analysts that cover Citi, and they have an average cost of about $109.93. So Citi may be running its course here. It has been underperforming as far as price the other 5 diversified banks, so there may be still room to run. So this will be one that I continue to watch. I did notice that on Thursday and Friday, it did have way above average volume. So that is also positive for this particular trade. I haven't convinced myself yet that this is a long-term hold in my portfolio, but I'm continued to watch this one as it moves along. We'll take a quick look at Citigroup in fast graphs. We can see that they're trading at a blended PE of 15.22 times. They do have an EPS yield of 6.57%, a dividend yield of 2.09%. Over the time frame that's shown, they have an operating adjusted earnings growth rate of negative 5.19%. Fast Graphs has their fair value ratio calculated at 15 times, and the normal market multiple is 11.9 times. That is represented by the blue line, and the fair value is calculated by the orange line, or shown by the orange line. It is currently trading right at its fair value. We can look over the past and see that it rarely trades at its fair value, and most of the time it even trades below its normal market multiple, but currently it is trading above that market multiple. We can see that they've had a couple years of contraction on their earnings. That improved in 2024 and is improving in 2025. That's not closed yet. That's still an estimate. But 2026, they're expected to grow 32%, and in 2027 by 19%. Next, we will take a look at Maplebear, symbol CART. They are doing business as Instacart, and they've had a recent string of bad news that sent them on a downtrend. The 200-day was downtrending. I have a couple downtrend lines drawn here that they have broke above. You can see where I've added some shares recently. I have an average cost of $43 on this one. They are trading above a 5-day moving average that is rising, a 21-day moving average that is rising, and a 50-day moving average that is rising. And the 200-day looks like it may have bottomed out and started to increase. So it bottomed out on around the 10th of December. One of the most recent pieces of news, and it's related to some of the prior pieces of news. On December the 10th, Amazon had a press release that was touting the success of their perishable grocery delivery and also their expansion plans to extend their grocery delivery. They took a pretty sizable hit on that particular day, but they did recover and actually exceeded that price. And then on the 18th, they settled a claim with the FTC for $60 million on deceptive consumer pricing practices. But the next day, they did recover past that decline. So I have a resistance line set at the high at the end or middle of September. I would love to see them break out above that, and then the next resistance point would be about 53.50. That is also where I have my buy price set. I have a blended value on CART of $67.57. And then if we add a 20% margin of safety, I think anything below 54.07 is a good buy price. So it is definitely trading in a buy zone, and with this recent crossover where it bearish mode and now moved back into a more bullish characterization, I think any time that it's trading below that price is still a pretty good buy. They did come down after getting overbought in first week of December. They did come down just below the 60 line on the RSI. They moved above. They came down and tested it, and it's once again moving higher. They did have a bullish crossover in bearish territory on November the 10th and have been in a bullish configuration since that point. The accumulation has moved back to near all-time highs. Money flow is positive. This one has underperformed the S&P 500 by 7.33%. It is underperforming discretionary by 8.4%. It is outperforming its industry group by 32%, while that industry group is underperforming the discretionary sector by 30%. CART did close at a 13-week swing high on Friday. So that is very positive news. This is a relatively small holding in my portfolio with a portfolio rank of 49. Next, we'll take a look at Costco, symbol COST. They have a blended value of about $616 according to my calculations. There are 20 analysts that cover Costco with an average price target of $10.51. So they're trading quite above the blended value that I have calculated, but trading below what the 1-year price targets are from the analyst. On December the 19th, they did close at a 52-week low, so this one has been a little bit concerning because they started a downtrend that I have pegged to the beginning of June, and it's been tested 1, 2, 3, 4, 5 times and been rejected each time, and it has now broken a shorter term support level that was at 873. They closed at 855 on Friday. So this one has been a little bit of a concern, and I've been deciding what I want to do with this one. One thing that I did notice, however, is on Friday, they traded at very high volume. So their average volume over 50 days is about 2.6 million shares. And on Friday, they traded 10 million shares. So this was very high volume. So I want to go out and look at 10 years worth of data. And I'm going to turn on my cursors here so we can see when we've seen this much trading volume and what it indicated to us when we saw that level of volume. So I can see the first point was back in June of 2017. The most volume occurred on a downturn. It didn't quite hit a bottom. This next big volume day was after a little bit of a sell-off and did indicate somewhat of a bottom. When we look at this one, we can see when that much volume traded that we were very near a bottom. We can see here that we were trading at a bottom when that much volume came in. Once again, here we were at a bottom. Here we were very near a bottom within probably $20 or so. These were buys, so that was as the price was going up. I see this one here, a big sell-off day, and we were near a bottom as well. This was a buying day, and we were moving up then. Then we had a couple more big sell-offs. That was not at a bottom. We had a big sell-off here. That was within $20 or $30 of a bottom. So what I am thinking with this much selling, if we go back to 1 year, with this much selling at a 52-week low, that we may actually be close to a bottom. But since it did break this support line, I also looked at any support below this, and I see support somewhere between $763 and $786. So this one is going to definitely be one to watch over the coming days and weeks before I decide what I'm going to do with this one. We'll look at my trade analysis for Costco, and this will come in handy when I try to answer a viewer question that came in after the live stream on Friday. So this will serve as a bit of setup for that. So basically, I just enter all of my buys, and then the day that I sell that particular tranche and the price that I sold it at, so I can keep track of all of my transactions. So you can see my buys and sells, and if I lost money on a particular trade or made some money on a particular trade, and then it gets all summarized at the bottom. So I've had total buys of about nearly $30,000, and I've sold nearly $20,000. So I have a net investment of about $10,000. So that's an average cost of $666.37 after all of my trades, and includes any dividends or options as well. So my total return would be about 11.3%. My current return would be about 14.4%. And if I had just bought and held the shares, I would have a return of about 8.9%. So on these 19 total trades, 8 of them are still open, so I've closed 11. 12 of them are winning trades, and 7 of them are losing trades. On the 7 losing trades, I have a total loss of $522. And on the 12 winning trades, I have a gain of $3,800. So that gives me a win rate of 63% and a gain to loss ratio of 4.28 to 1. So what I endeavor to do is limit any losses and to let my winners run. CorMedix, symbol CRMD, is a relatively new holding for me. Has a portfolio rank of 47 in my portfolio. I have a blended value calculation on CorMedix at $25.07. There are 7 analysts that cover CorMedix with an average 1-year price target of $17.43. And on a more short-term basis, based on this cup with handle formation right here, I have a shorter-term price target of about $14. So I've done a detailed video on this particular holding that was released on the 30th of November. So if you have any interest in this particular company, be sure to take a look at that video. So on about December the 2nd, I purchased 200 shares as it began a rollover back into what looked like to be more favorable pricing. The 21-day not soon after began to cease its downturn and to increase in pricing. The 50-day has since rolled over as well and is now increasing, as is the 200-day. It is also increasing. I also purchased 2 put contracts at 55 cents with a strike price of $9, and those expire on January the 16th. So if it closes below that strike price of $9, I'll be obligated to buy 200 shares. And I will have collected premium on 2 contracts worth $55 each. They have been on a downtrend, indicated by this downtrend line. They are very close to breaking above that. We'll see if over this next week or two, if they can break above that, given the positive trend in the moving averages. I do think that is possible. Also, with the RSI currently above 60 and above the 2 previous highs that we saw on the RSI, I think that is possible. We have a bullish configuration on the PPO back on December the 2nd, and it has actually moved into bullish territory at this point. We saw that distribution had hit a low at the end of November, beginning of December, and it is moving higher. The money flow is currently positive. They are outperforming the S&P 500 by 16.33% over the last year. They're outperforming healthcare by 17.1%. They are outperforming the industry group by 8%, and that industry group is outperforming the S&P 500 by 7.45%. So it's a strong company in a strong industry group, and that industry group is also very strong. I highlighted this particular chart today because CRMD closed at a 13-week swing high on Friday. We'll take a look at Genmab, symbol GMAB, also a relatively small holding in my portfolio with a rank of 50. I have a blended value calculated on Genmab at $48.20. And there are also 5 analysts that cover Genmab with an average price target of $40.40. Based on this pattern here, this cup with handle pattern, I have a shorter term price target of $36.64. They have been on somewhat of a short term downtrend. They did cross above that, came down and tested it, and are trading above that downtrend line. I also have this upward sloping trend line, which since they're consolidating here and have been consolidating, I think they're getting ready to break out above this trend line to eventually hit this price of $36 per share. The 21-day moving average is moving higher. The 50-day moving average looks like it's bottomed out and turning over. And the 200-day has been increasing since September. They did have good volume on Friday. They've been able to keep the RSI above the 50 line. The PPO is in bullish territory. Accumulation is pretty near a 52-week high. Nope, we're only looking at 6 months, so this is 6-month high. The money flow did turn negative during the past week, but they've been outperforming the S&P 500 by 30.7% over the last 6 months. 27% they're outperforming the healthcare sector over the last 6 months. The biotech industry group, they are also outperforming, and that industry group is outperforming the S&P 500 by 6.5%. So I think Genmab is set up fairly nice at the moment, and I'm looking for a price in the fairly short term of $36, currently trading at $32. We'll look at Genmab in fast graphs, and we're looking over history that starts in about 2008. They are currently trading at a blended PE of 17.67. They have an EPS yield of 5.66%. They have an earnings growth rate of 15.94% over the time frame shown. FastGraphs calculates their fair value to be 15.94 times, and the normal or the market multiple is closer to 50.52 times. So we can see over this time history they have had a few years of contraction in the EPS estimate. 2025 is still estimated, but they're expected to grow 9% this year, and we're almost to the close of this year. 2026, it is expected to contract slightly, but in 2027 we're expected to see a 29% increase based on analyst expectations. Since about 2021, before that, they were trading at their normal market multiple. They traded sideways for quite a time and did come below their fair value as calculated by FastGraphs, but they have been able to manage to get above their fair value and trading just slightly above that at the moment. Next, we'll take a look at Alphabet, the symbol GOOG. Since they reached a peak at the end of November, they have been on a slight downturn. The 21-day had rolled over, but given the trading on the last 2 days, has turned back upwards. I have a calculation, a blended calculation on them of $319. There are 43 analysts that cover Alphabet with an average price target of 307. So my blended value is pretty close to what analysts are thinking. I had expressed over the last 2 weeks that I was a bit concerned about how far extended Google was above the 50-day and the 200-day moving average. That has improved slightly this week. So last week they were 10% above their 50-day moving average, and this week they are 7.15% above. And last week they were 48% above their 200-day moving average, and this week they are 44. So still pretty extended above the 200-day moving average, but are getting closer to the 50-day moving average, which they haven't really tested since the end of June. I'd also expressed concern about the bearish negative divergence on the RSI. So what that means is that with each peak in the price, we are seeing lower peaks on the RSI. So that usually ends up indicating at some point that there is somewhat of a pullback. Even though tech was really declining at the beginning or during November, Google was doing pretty much exactly the opposite. They pretty much consolidated. They had a couple days where they were down and right back up to all-time highs. I also see the negative bearish convergence on the PPO. So this is something to watch. I did get stopped out of 5 shares a few days ago, and I was able to sell those for $305.16. They did trade in the 200s for a couple of days, but then on Friday they closed back at 308. So this may have just been a one-day fall below my stop loss, and we're back to highs again, or we have another downturn, and it would find support at this next line that I have indicated here, which is tied to about the beginning of November. So we'll see how this one works out. It's one I've been watching closely over the last few months. If we take a look at FastGraphs, they are also showing that Alphabet is pretty much trading above their normal market multiple and also their fair value. While we're looking at the communication services sector, we'll jump to Meta and take a look at where they're trading and what I see on the charts. So they've recently formed a cup and handle as well. They haven't quite broke above where the right side of the rim is, so this may be a little bit premature. But if they can do that, then I think we have a shorter term price target of around $733 based on that pattern. They are trading at the the confluence of resistance lines. They were able to trade intraday above the 200-day, and they reached the downward sloping 50-day. They pulled back and dropped back down to the 21-day moving average, which is upward sloping. That short pullback also dropped the 5-day moving average to a down sloping, but it has reversed course and is now upward sloping. And Thursday, they actually traded above the 50-day moving average, which is down sloping. And then on Friday, they closed at 658, which was just barely below the 50-day moving average. So unlike Google, which is trading quite above its 50-day and 200-day, Meta is trading right at those two averages, and I think has more potential upside in the near term if it can break through that 200-day moving average, which I think it's almost on the verge of doing that. I also have a resistance line that is set to the peak set back in May, and then a shorter term that is set to this gap down. So we have those two resistance lines. We have the 50-day and the 200-day that we're battling against at the moment. We did have high selling volume on Friday, but it was options expiration day, quadruple witching day. So you can always expect pretty high volume, and we did get that in Meta. The RSI is above the 50 line. The PPO did move into bullish territory on probably 3 or 4 days ago, but it is in bullish territory at the moment. I have a blended value calculated on Meta of $817.73. There are 43 analysts that cover Meta, and they have a price target of $817 for the next year. So my calculated value and the analysts are very, very close. I have been able to take advantage of buying some calls and selling those in relatively short order for a profit. I made about $2,000 on buying calls at opportune times and selling them when we get a bounce in the price. So that's been a nice bonus on the Meta shares. We'll take a quick look at the Hershey Foods Corporation, symbol HSY, which is in the consumer staples sector. I had a couple of upward trend lines, one set to the bottom we saw in May and connected to a couple points that we saw in July. It did break down below that and hit this next point where I created another upward trend line. It only stayed there for a couple of days and then moved up to the resistance line that I've established at the high we saw in October and to the point that it reached at the end of November. It did have a pullback and has since broke out above that shorter term downtrend line. It was short term because the 200-day is still increasing, so overall they are in a positive price action after the 200-day bottomed out somewhere around the beginning of August. The 21-day is moving higher. The 5-day moving average is also moving higher. The 50-day is declining, but the 200-day is increasing. I have a blended value of $190.45 on this one. There are 18 analysts that cover Hershey with an average price target of $183 $2,222.87. So they still have a while before they break out above this upward trend line. I don't know if it'll reach that because they will be facing resistance just based on their intrinsic value. If we look at Hershey in fast graphs, they have an EPS yield of 3.23%. They do pay a dividend with a yield of 2.9%. Fast graph shows that they have an earnings growth rate of 5.91%. Their fair value is 15 times, and their normal PE is 21.51 times. They are trading above both their normal market multiple and their fair value at the moment. We'll give an update on J&J, which is ranked 15th in my portfolio. I have a blended value on them of $172.57. 15 analysts cover J&J with an average price target of $206.98. And I mentioned at least over the last 2 or 3 weeks that J&J was a counter trend idea, and there were some opportunities to either trim some shares or sell some covered calls. That worked based on this high. They did have the pullback, so I was able to sell a covered call at a profit. And then once again, I sold another covered call, and that one got into the money, and I was at risk of losing my shares, but I thought there was still opportunity for a pullback, and indeed it did pull back, broke down even below the first resistance line that I had in place. So I was able to close out my covered call that I had bought on the 21st of November. I had sold that for $2.56, and I was able to sell that I was able to buy that back at $136, and that was at a $120 profit. If I would have just let it expire, then I would have had a profit of $256 on that one. But I made money anyway on that one. The 5-day is rolling negative. The 21-day is still increasing. 50 days increasing, and the 200 is increasing. So I still think this is an opportunity for some selling some covered calls. But as it moves back down to the 21-day, it did successfully bounce off that. So I would be careful selling covered calls too close to the current trading price. If we take a quick look at fast graphs, we can see that they are trading quite above their normal market multiple and their fair value ratio. We'll give an update on Prudential, symbol PRU, in a 1-year daily price graph. I had expected financials to do pretty well in the final quarter of this year, and that indeed is what happened. So I had overbought some shares in Prudential, and then I trimmed out those shares that I had bought as it got up to what I consider to be a pretty fair price for Prudential, and I see it frequently rise up anywhere between 118 and 121. Last time it was at this price was back in February. So anyway, this trade worked out well, and I'm back to my normal portfolio weight on this one. The 5-day has rolled over. I have a resistance line that's set at 112. That's now a support line, so I'll have to change the color of that one and this one to a green color to indicate that they are support. I'll be watching to see if it comes down and hits this support line and where the 21-day is in relation to that at this point. They have a book value of approximately, an adjusted book value of approximately $99 per share. So I consider that to be a pretty fair price for Prudential. They don't test those levels very often. They tested those in April, but it's not very often that they get below that particular price. And all of the moving averages are moving up. On the RSI, they had reached a peak back in August. Then the RSI weakened, came up and tested that once more. And then in the final quarter of this year, they have moved into overbought territory. They are currently sitting at 66, so they moved out of overbought territory. And I'm watching to see what happens if it can maintain the momentum at these two previous highs. That would be a sign that if it can hold that it could have one more run. If it breaks down below that, then I'll just wait until the price gets closer to what I consider fair value. If we look at fast graphs, they are trading underneath their market multiple and fair value, and their market multiple is where they tend to stall out. Rocket Lab, symbol RKLB, is a small position in my portfolio, currently ranking 52. This is a very small position, and I basically added a position here just to keep a watch on this industry. But I do see a cup with handle has formed here. So based on that particular pattern, that would give me a price target of about $89. They did have a really good rise on Thursday of 11% and then 17%. So a 28% price change over the last 2 days. So I had trimmed some shares from purchases I had bought earlier, let it bottom out, and purchase some shares and riding this up at the moment. They did have very big volume on Friday and above average volume on Thursday. The RSI did peak out at around 70 back a little earlier in December, 10 days or so ago. Came down, didn't even touch the 50 line, and started back on another rise, and we're testing that 70 level again. So this will be interesting to watch to see if it loses momentum or continues to rise. We are in positive territory in the PPO. Accumulation still looks strong and money flow is positive at the moment. I have a stop loss set on this one at $61.81. There are 13 analysts that cover Rocket Lab with an average price target of 50, so it's trading above what analysts believe the 1-year price target is. We've been watching RTX, symbol RTX, in the 1-year daily price chart. And I mentioned a couple of weeks ago that it's been trading in a trading channel, and anytime it gets down to the 50-day moving average or the bottom of this trading channel, that it is typically a pretty good time to buy RTX. So I had purchased a few shares and I sold them this week for a profit. We do have a 200-day that is still increasing. It's above a 50-day moving average and a 21-day. The RSI is currently sitting at 53, which is in positive territory. It's trading at 63. So it's above the 60 line, and we do have a positive PPO. And the accumulation is still looking strong and we still have money flow that is positive. My one concern about RTX, I have a blended value calculation on RTX of $121. They're currently trading at $182, so they are priced way above their fair value, what I consider fair value, and also what Fastgraphs considers fair value. And it's trading above its market multiple as well. So I'm being cautious with this and trading it judiciously because it is overvalued in my opinion. Give a quick update on UPS in the 1-year daily price chart. UPS has been struggling for a couple of years. I have several short-term downtrend lines that they started breaking above. So I had been purchasing shares at these levels. They had a pretty solid gap up on good earnings. They consolidated. I purchased some additional shares. I'm still way underwater on this one. I think I have an adjusted cost of about 117 on my shares. We do have resistance at about 102, which is where it's trading at right now. They closed Friday at 101.92. So they are right up against that resistance line. We do have a 5-day that's moving higher, a 21-day that's moving higher. The 200-day is still declining at the moment, and the 50-day is increasing and looks like it could be crossing above the 200-day within the next couple of days if this price action continues. I have a market fair value on this at $107. There are 18 analysts that cover UPS with an average price target of $105.11. And the one real positive on UPS is they did have a 13-week swing high this week. So that is positive news, along with the RSI being positive. Getting up close to the 70 line, so we'll have to keep an eye on that. Has done a pretty good job of maintaining the lower bounds above this previous high that we saw. Actually surpassed it, came down and tested it, surpassed it again, went into overbought territory. Fell below it a little bit here, but generally it was support. Support once more at the beginning of December and has then increased. We do have a PPO that's in positive territory. They are still in distribution at this point. This is on a 1-year chart, so they are near 52-week lows on accumulation distribution. But the money flow has turned positive recently, so we'll see if it can stay positive for more than a week or maybe 3 weeks at a time. So anyway, this is one that I'm watching pretty closely. This is one I let get away from me a little bit, and it's trading below my net cost. I typically try to minimize those losses, but I didn't have my process fully implemented on this one, so this one got away from me. Let's take a look at UPS in Fastgraphs, and we can see that their calculated fair value, they're trading right at that level at the moment. UPS has had 3 years where they really struggled with earnings. They went from as high as $12.94 a share in 2022, and then they had contraction for 3 years. But in 2026, they're expected to return to growth, and also in 2027. They currently have an EPS yield of 6.84 and a dividend yield of 6.44. Following a live stream on Friday, I received a question from a viewer that I'm going to attempt to answer using my return analysis worksheet that I use for my transactions. But he says if I buy a stock at a high price, let's say $100, and then I buy again at a low price of $50, the price went back up to 75. If I want to sell my stock that I bought at the higher price for a loss so that I can have the money available to buy when it goes back down to 50, would that still be profitable if it eventually goes back to $100? Even though I sold it at a loss, I'm not sure if it would just cancel out. So I don't know what stock symbol we used here, so I just modified my worksheet a little bit to ignore a symbol and remove my automation for gathering the stock price, because I'll simulate that here. So, and I don't know when the buys were or when the sells, etc. So I just put some dates in here. So I'm going to use May, and just bought one share at $100. So if I buy a stock at a high price, let's say $100, and then it says if he buys it again at a lower price, so I'm assuming a date that's later, he buys one share at $50, and then if it goes back to 75, to sell that higher priced one. So I'm going to say at some point later, in between these two dates, that he sold that at 75 for a $25 loss, which would be 25%. And then it went back to $100. So here's the $100 that I set back. Would it still be a profitable trade? So in my opinion, it would be a profitable trade because you're making 100% on this one and you lost 25% on this one. So your net gain would be $25 or 65 or 16.7%. And I have a dividend in here that I need to get rid of. So the total gain there would be the $25. You made an investment of $150. So your total return would be the 16.7%. A buy and hold would have been a 33.3% gain. So in this particular case, you made one winning trade, one losing trade. Your win rate would be 50%, and your gain-loss ratio would be 2-to-1. So on the loss, you lost 25, but on the win, you made $50. So if I understood the question correctly, and I'm interpreting your question correctly, then it would be a profitable trade. So it's not just canceling out. So hopefully that helps, and hopefully I understood your question correctly. And I'd recommend that maybe you look at some opportunities to improve the trading strategy so you're not taking as big of losses. Consider how you can sell or put in some stop loss orders so you don't lose that money on the downside, and watch those charts for when it starts making a run higher, and consider getting back in at that point. I think you could improve your trading strategy if you looked at some options in that particular area. So I wish you the best with those trades, and hopefully this explanation helps. If you found this video helpful, please remember to subscribe to the channel and set notifications to be reminded of future videos. Be sure to press the like button to help support this channel. I wish you the best in your investment journey, and remember to trade well. We'll talk to you again soon.